Good afternoon and welcome to today's Charts of the Day. Back in May, we did an article on financials and our concerns because of the relative weakness that we were seeing in the moves off of the December low compared to most other equities that were already making new highs at that point at the end of April and beginning of May. Since then, we did manage to see nominal new highs over the May high, further complicating this possible B wave, while the rest of the market got even higher in what counts best for the rest of the market as a fifth wave of the parentheses wave 5 of primary wave 3 off of this December low. But the XLF, and as we'll see, a number of the individual financials, have made a series of lower highs going all the way back to early 2018. So despite the move up, they did get a little bit higher than the May high. They did not get higher than September 2018 in XLF, and certainly not over the January high. This does complicate the count a little bit because with so many individual equities and the indexes themselves, with the exception of the small caps, counting as an extension of this primary wave 3 into the top here, those are looking for a new ABC move off of the recent July high into late 2020 as primary wave 4, where some of the financials that we'll see easily still count as a B wave and could be further ahead in that count. So I have two possible subwave paths in XLF. One is the blue ABC at the intermediate degree for primary wave 4, starting off of this high in July as a truncated top. So it is still the extension of our primary wave 3, but failing to make a higher high, so it is called truncated. The other count, the orange count here, still goes off of either of these highs back in 2018 as the top for primary wave 3, and an A and a B wave, and already in the C wave down for that wave 4. But the C wave here can stretch out a whole lot more into 2020 as well, and take a lot longer as a possible ending diagonal. So we're going to zoom in briefly and take a look at the initial structure that we have off of the most recent high and how that would fit into those two possible different counts on XLF before we look at some of those individual names. So this initial move off of the July top counts best as just an initial move down. It could be a wave 1 of this wave 1, but I think in order to get as much overlap and stretching things out as longer term as we can, if we are getting that orange C wave, an ending diagonal makes the most sense. So in both counts, whether we're talking about the orange wave 1 or the blue A wave of the parentheses A wave, we can have an AB move off of the high and starting this C wave down as a 5-wave C wave off of that 27.33 top from last week. So we can try and consolidate a little bit more in a wave 2 here, maybe even dropping a little bit lower in the wave 1, and possible that this still tries to come back up into the 2750 region as a wider flat, an expanded flat for the B wave. But really looking for a move to head down towards the 24 to 23 region before we get the next significant bounce. All right, let's jump in and look at some of the individual names. Morgan Stanley is one of the names that I think has been most concerning to us. And this is one where when we zoom out, we look at the structure off of the 2000 top, and the 2008 low here on Morgan Stanley looks like just a cycle degree A wave, and where most of the rest of the market is in an impulsive move and is only topped in a third wave off of the 2008, 2009 lows, and is going to get a fourth and a fifth onto new highs. Morgan Stanley has clearly held as an ABC corrective move, hitting a 764 retrace, and can easily be starting a long-term decline that would be very reminiscent of the one in Deutsche Bank. Deutsche Bank is right around here right now, so we're actually starting to look for possible signs of a bottom in Deutsche Bank if it doesn't actually go out of business. but we could start to see a very similar decline happen with Morgan Stanley. In the shorter term, again, the earlier March 2018 high is the top of that cycle degree B wave. The move off of December low was a clear ABC correction for that parentheses B, and we can be starting the wave 3 of the third in that C wave down, heading down into later in the year 2020 to complete just the first move, the primary degree wave 1 of that larger C wave down. Let's jump over to Bank of America. I think I have a larger degree count here. Bank of America has potential for similar concern of that cycle degree B wave that we were looking at in Morgan Stanley, but we can make allowances because this did get a little bit higher, and the structure here off of the 2011 low can count as an ABC up for this third wave of a larger ending diagonal. So that would allow Bank of America to get a nominal high over the high that it made back in 2006 as a very muted ending diagonal, trying to get one more high, but the same structure that we're looking at in Morgan Stanley can still trace out here with getting more of a C wave down of an A and then a bounce and then a C wave down, either for that primary wave 4 or countable as the primary wave 1 in the larger C wave down starting. So both looking for some significant downside. Next, I want to take a look at JPMorgan. JPMorgan counts a little bit more like the regular equity market with an impulsive move off of the 2009 low, counting as the top of a primary wave 3 here in 2018. Maybe this is a very awkward extension for an alt 5 of that primary wave 3, or the same A-B structure looking for a C wave starting now to complete that primary degree wave 4. Off of the recent high, this held on by a thread, so we can have a possible 1-2 start to that C wave down, which might stretch more into the end of this year, and then get a B wave bounce before heading lower in the primary wave 4. If we were to stretch further towards the 80 to 76 region in this move, then we may not need the other B wave bounce and head lower, and it's possible that JPMorgan might form a bottom sooner for that primary wave 4 and maybe have a more bullish setup in the retrace from that bullish move into the later 2020 low when the rest of the market might be bottoming. Goldman Sachs, very similar structure to Morgan Stanley. Again, possible really clear structure here as a 3-wave move up for the primary A wave off of the 2009 low or 2008 low, and then an ending diagonal structure for the C wave. It did actually make a nominal higher high over the 2006, 2007 high, but easily starting that cycle degree wave C lower, set up for the C wave down into 2020 to complete primary wave 1, and then when the rest of the market is starting that 5th wave up that'll take it to new highs, a lot of these financials may get a pretty substantial bounce, but ultimately that'll be a corrective move that would fail longer term. And lastly, I wanted to take a look at Burke. Burke, again, similar to JPMorgan, with an impulsive move topping in the primary wave 3, did not get the higher high like the market did into May or July, has made a series of lower highs than it did at its top back here in November of 2018, but it does count very cleanly as 5 waves up off of the January, February 2016 low for that parentheses 5 at intermediate degree, and looks very good for starting the same A, B, C structure for our larger primary degree wave 4, ideally targeting the 150 to 139 region. Though it's possible, like we said on JPMorgan, if this current move down off of the July high is going to continue and stretch towards the 160 and into the 150s, then it is certainly possible that we could count that as all of this primary wave 4 here and not need another B wave and C wave lower. All right, we'll go ahead and stop there, and I will get this uploaded for you guys, and see you next time.